The following segment is sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. LT Gray Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at ltgraysilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Good to be with you, Ellis.
David, I'm optimistic about the economy right now and therefore pessimistic about the precious metals market.
Well, there's all kinds of opinions. That's what makes these shows popular. Couple things. One, defensive posture with silver. Silver is like a good time, bad time metal. It's a little popular word these days, bipolar. Basically, silver is heavily used industrially and a high-tech metal, and I've always jokingly said, and this gives the idea, although it's extreme, that, if you had a really booming economy and everybody's working and everybody's making money and everybody's just increasing their lifestyle, that you'd have, flat screen TV in every bathroom, which would take a lot more silver. So silver really does play a role in a robust economy, much more so than gold. Gold tends to follow gloom and doom. Silver, on the other hand, is like gold from the monetary aspect, but that's about half of the market. Half of it's industrial, and the other half is, there's jewelry in there, of course. This is about 25%. But it follows gold from a monetary aspect, and of course it has its industrial component. So sort of both. As far as the overall economy, I just finished listening to John Williams on another program like yours, and he was very factual about his data. He basically said he doesn't really see any recovery at this time, and this interview was just a couple days ago, so I'm giving the most up-to-date information from the way he sees it. I'm sort of in the middle. I am looking here where I live, and things haven't really started to pick up much, but I will say, careful observation, that we are getting some new construction downtown. There seems to be, let's say, a little bit more economic activity than I've seen over the past couple of years. So this being one of the not very robust areas of Washington State, second biggest city in Washington, but it's not known as being a very wealthy area in this state, does show some pickup in activity here.
I want to discuss that, but I'd like to fall back to a comment you made about John Williams. If he's not talking about gloom and doom and hyperinflation, he's got nothing. That's his whole gig.
Okay, that's fine. Well, you're making me laugh. That was his message, so we can press on with what are you seeing, Ellis? What do you see where you're at?
Well, I collect cars, Mustangs actually, vehicles that hold their value and grow in value, and I hang out at a car show here in California every weekend almost. And I have a friend at the show who is the manager of a Toyota store down here, a big one. I won't mention their name, but he said that business is booming for new and used cars. I tend to believe that California is a leader with regard to the rest of the country. When these jobs claims are hitting 6-week lows, now because of that conversation, I'm tending to believe it. How is that ever going to be good for speculative gold and silver stocks, which tend, as you said, to follow gold?
No, you make a good point, and I don't want to be anything but consistent. Basically, I've told, my members especially and the public that I think that we're bottoming here, and this would be a transition year. I've never said it's going to be a really huge booming year for the metals. I think we could go sideways, trending up. I do think it's possible to see $2,000 gold by the end of the year. But having said that, the Dow Jones is making a new high, and technically, on a breakout, if it sustains here for a few more days, basically it's saying it's time to get into the stock market, as odd as that sounds. On top of that, I want to make another comment, and this is someone, I won't use his name, but he's an extremely good investor. He has been in the industry for a very long time. We trade letters, and he just put out an alert, basically what I just said, that the Dow is breaking out, and the last time it did this, it was good for a 20% gain, and said, as much as I'm remiss to say, I'm real fond of the stock market at these levels, I've got to go with what the technicals and what the sentiment is, and, you might want to trade this market to the upside. So, I go along with that. This guy is very savvy, very good. I'm agreeing with him that I don't really like it fundamentally. I think the market's actually overvalued here. There isn't a lot of participation on the insiders, but it is what it is, and if I were to do that, which I personally am not yet going to do it, I would do it carefully. In other words, I'd probably take some options or something like that where I had limited risk to the downside. In other words, I'd make a bet on it going higher. But maybe things are picking up. A little bit here. I try to get the the actual on-the-ground look and not pay much attention to whatever bureaucratic agency is feeding us this number and say, oh, yes, well, look at that number, because they're always adjusting those numbers. I try to, get out of the airplane, get in the taxi cab, and take a hard look around, and whatever hotel I'm going to, talk to the cabbie and say, look, what's your economic activity like? Jobs hard to find here, or that type of thing. So maybe it is turning around. I'm reluctant to say it, but again, I'll go back to what you said, Ellis. California always has tended to be the leader in these type of things. So if California is picking up, as you say, and you're in Southern California, which is fairly affluent, but you guys have been kind of down and out like the rest of the country, and if you're picking up now, maybe things are starting to move. And one last comment, and I'll use his name, and it's Rick Mayberry. Rick and I have a pretty long history of knowing each other and trading newsletters. I've had him on some of my special reports from time to time. I just got his latest information, and he really thinks that the velocity of money is starting to pick up. And the velocity of money is the turnover. In other words, you go down to the Toyota dealer and you buy. And you go buy the dresses, the cars, the luxury items. You go out to eat more, you go to the theater, and all that type of thing. And he has suggested that that is taking place, and he thinks it's going to accelerate, and he thinks the recovery, if you want to call it that, is starting, and that everyone is going to give out a big cheer. Oh, the recovery, this is great. Look, economic activity is picking up, and it won't really be a problem for probably a year or so, meaning that, more economic activity. Shop owners are doing better. Merchants are doing better. The economy is more aggressive. It's starting to grow, and all that. That, as he points out, and I agree with him, assuming all that's correct, that inflation starts to come back, especially in the needs sector, meaning like food, water, housing, that type of thing. And then people start to say, maybe this reacceleration of velocity of money is not such a great thing. Look at what's happening to food prices and gas prices. They're starting to accelerate on a week-to-week-to-week basis. So that's sort of the big picture. Again, I hope I'm staying consistent with my readers, my listeners, and people that follow my work. But, it's been a tough one. I mean, I don't think I've been in a position that's been this difficult to make a call in quite some time, and I'm trying to stay open to all possibilities and think them through. So what I just said about Mayberry, and his idea is, as mine is, to don't abandon the metals. Certainly keep them. Just realize that, again, it's probably going to take some time. That's where I'm at. I'm still adding to my position. I said anytime you can buy silver or gold, silver under 30 and gold under 1,600, it's probably a good buy. But it's also something, again, you have to, I think, have a 3 to 5 year horizon. So interesting times, Ellis.
You've made several good points, and I'd like to make a couple in relation to them. QE3, or quantitative easing infinity, seems to actually be doing its job by getting more of a velocity of cash into the system, as you might have said, increasing the money supply and not helping the price of gold as many of us speculated would happen. However, at some point down the road, inflation may kick in indeed for whatever reason. That's bound to happen. And then John Williams is exonerated, at least by me, and we've got a market we can trade into with regard to precious metals, but that may be a year or more away.
Else, I have to say, your opinion is as valid as mine. I mean, I think that, again, we're bottoming here. We're going to probably get a rally into maybe June or something, but I could be wrong. I mean, it's, again, tough to call. I'll base it on probability. I do a fair amount of technical work, and normally in the run that we had in silver so long ago, it seems like ancient history now, but it's still true that we moved from basically the 19 level all the way to 48, and then we backed off. Usually those consolidations take about 2 years. 2 years will be the end of April this year, so we're only looking about 6 weeks, 7 weeks out. And it's not a precise number, but that's the idea. It could certainly go longer than that. That's the average. We're getting in a time frame where we should be bottoming. Sentiment is horrible. It's probably the lowest sentiment we've ever seen, and we've got the highest reading in about 30 or 40 years for what an ounce of gold costs versus what buying the XAU costs. So, all the technical work says, this is it right here, right now for a bottom. But again, that's my opinion, Ellis. It doesn't mean I'm right. Your opinion that we could go another year is just as valid as mine. I want to emphasize that because, again, this has been a tough one to call. It really has. Just to, try to stay consistent with everyone. I'm not giving up. I'm still buying more. I'm not buying like a ton of silver here, but I'm picking out silver here and there, and if I had a dollar cost average through, I look at it as still as a good investment. It isn't the great investment it was when silver was at $5. I admit that, but I'm looking looking at it, longer term, and I think, again, 3 to 5 years out, that $30 silver is going to look pretty cheap. And to say one more thing, what people seem to have a hard time conceptualizing is that when QE4 was announced, they said, oh, more inflation, getting the metals. And I was very disappointed. In fact, I know some friends that were trading that basis that news. When QE2 was announced, that's when we got this move in silver from the 20 level all the way up. So QE4 is announced and the market goes the other way. And the point is, it's not a function of how much money they've printed. Because if that money is printed just sitting in a vault, it has no velocity. It's not moving. It's static. It's as if it doesn't exist. It's the velocity of the turnover of that money. It's when you go down and you get that loan, you make that purchase. So you start the activity. In other words, the amount of turnover. That's what's important. It's not how much they've printed. And people seem to miss that idea. I'd say Rick Mayberry does probably one of the better writings about that topic, and I agree, it's true. So you're starting to see economic activity. It would certainly take several months before, in my view, before you see that economic activity turn into an inflation concern. But once the psychology moves into, oh my God, look, gas prices are going up every week. Every time I go to the grocery store, it's higher. This is getting out of hand. And I think that's what John Williams has alluded to all along. If we get to that point, I think we could definitely get to that point. That's when it's really hard for the Fed to control it. So we'll just have to wait and see.
We'll just have to wait and see indeed. Of course, I can't help but think that this just widens the have and have-not gap, because there's plenty of folks living on fixed incomes or small paychecks that just can't keep up with the cost of fuel to get from point A to point B.
That indeed. Just looking at John Williams again, and there was like a 47 million on food stamps in this country. It's a sad day. It's a sad day. Really, I'm more in favor of the reset button. It's like rebooting your computer. It takes time, and you're kind of hoping the computer, fires back up all the way. But things have really gotten distorted, not only in the United States, but globally. And there's some drastic things that need to take place, and hopefully, I believe the pain will be worth it. But we cannot structure the situation the way it is now and expect it to come out and thrive. We might get a big boost and a nice run and get some velocity in the economy, and things look good for a little while, but the structural problems that exist are not being addressed, and that's what needs to be addressed for this thing to get on a solid basis where we can move forward and have sustainable growth, I guess the buzzword of some of the liberals, but I'm not against sustainable growth. I'll comment on that as well. Most people that are probably not very favorable to the precious metals. So one thing I like to say about the idea of sustainable growth is really you have a very sustainable growth situation under a gold standard, because there is growth in the money supply. There is more gold taken out of the ground every year, year over year. So, but it's a very small growth rate, a sustainable growth rate, if you will. And there's a lot less distortion in the economy. It's when you're in a Keynesian system that you can print, loan, and a fractional reserve banking system that allows $1 to become 10, that you get in this massive distortion or misallocation of capital. But under a true gold standard, where the savings is what you build with, and there's only so much gold coming out of the ground, so the growth rate is slower but sustainable. So, I like to throw that out there, Ellis. I don't hear many people talking about that, and that's something I think to bear in mind. I remember coming upon that, years and years ago, and there wasn't all this emphasis on the green and sustainability and that type of thing, but I thought, well, isn't that interesting? You can have a loaf of bread that costs the same for 100 years, that type of thing. And of course, this is on a true, honest monetary system.
Referring back to something you said earlier in this interview, we really don't see gold or silver production slowing down. Definitely not consumption. That's not happening, especially considering silver is an industrial metal. At some point, speculators or investors have to look at these companies, see they're making money, and say, well, why shouldn't we invest in them?
Right. Well, the best place to invest, if you're new to the sector, I've always taught and want to be consistent that if you want to be a precious metals investor, the best place to start is by the metal itself. In fact, I've even made the comment that unless you own the metal, I really don't want you looking in the Morgan report where we look at these companies. Bear that in mind, but nonetheless, if you really want to get involved here, the best place to get involved is in the mining sector, because these things are dirt cheap, and some of them provide good yield, so you're making more money than you would on a T-bill. It's gold or silver or both backed, and on top of that, you got a fantastic upside. You really want to buy when no one wants them, and this is exactly where we're at right now. No one wants these things. Now, that doesn't mean you're not going to have to wait, 3 months, 6 months, maybe even longer. I don't know. I think it's going to bounce here pretty quick, but again, that's just my opinion.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. I have a friend in New York who's a member of the clergy, and we never talk about anything related to what I do for a living, let alone investing in silver or gold stocks. But he chatted me up the other day mentioning how cheap they are now and how it's a good time to possibly invest. I guess he's been listening to the two of us, or someone.
Could be. Well, I've hopefully been pretty consistent in this interview. It's been a tough call. I think we're pretty much bottoming. I do think it's a good time to get in. I really do. But I don't know what the time factor is going to be going forward, and neither does anyone else. I will bring to the fore someone that's very, very notable, if we've talked about on your show before, and that's Jim Sinclair. Jim's basically saying by the end of March, the bottom is in. And he's putting his reputation on that. And I wouldn't bet against Jim, but, he's not always 100% correct, like any of us.
What would you say to our listeners and your followers specifically who are itching to make money in the short run? They're used to doing that. You mentioned a stock market that could rise another 20% in the foreseeable future. What are you saying to these folks?
Well, that's something I do on the advanced service where I, use technical analysis and chart, and I just make a movie using some charting services and other places on the internet. And I haven't made a trade in a while. I mean, people that, don't subscribe, that seem to know everything that I do and badmouth me, that's fine. They can have their opinion. But I haven't made a trade in quite some time. I haven't seen anything I liked. I did do a spread trade on platinum versus gold, meaning that platinum would catch gold. I got the first one and missed the second one, unfortunately. I did allude to the fact that I thought platinum and palladium would lead the rally, and that's been true, but I didn't make that trade either, but I did, write it out in the Morgan report. Regardless, bond market to me looks like it's probably very tough to call that market or any market. But what I do, Ellis, is I sit down and I let people look over my shoulder and I tell them what I see and what I'm doing. And I have made some pretty good calls, particularly in the metals, regarding, movements. When you have a very long going sideways market like we've had, it's pretty tough to trade. It's not the style that I like. It's called scalping, and you got to go in and get out pretty quickly. I like more position trading where you have these huge washouts and you get in pretty much near a low, or you make it break out, which is the preferred method that I use most often. You force the market to prove to you that it's on the way up, and once that's established, you get in and ride it as long as you can. And that's been very successful to me for many, many years. So I just wait for the opportunity. The problem is you can't tell the market, I'm ready, I want to trade now, come on, let's go. You just can't do that. And of course it's frustrating at times because I'm ready to put a trade on, believe me, but I just don't see the conditions at this point in time where it behooves me to do it in the metals and in other markets. The dollar's chart's very interesting to watch, but I'm not ready to put a trade on there, so I just have to wait for the opportunity. I'm pretty good at letting the market tell me what to do, not me tell the market what to do.
Talk about the MorganReport.com, which started out being silver-investor.com.
Well, the MorganReport.com, the URL, and it's also silver-investor.com. I think one thing that people don't understand about the Morgan Report and our subscribers, and our subscriber base really isn't that big, is that we don't just look at the silver market. Now, I admit we emphasize silver quite a bit, and it is my specialty. That's a fact. But we've looked at many companies across the board, and we have featured several that are outside of the silver space. Mostly they're in the resource space. We're probably going to do something in the energy sector, and it's not my work. I have two analysts that work, well, actually three that work with me, which means four total. And we're probably going to look at something in the energy sector for high-yield stocks that provide income, because I changed it to the Morgan Report years and years and years ago because, one, I wanted to be outside of just the silver-only guy, and I wanted to bring opportunities to our members that were outside of silver alone. So a lot of people, again, think that, well, that's all he talks about. I have my silver position. I like hearing him on the Ellis Martin report. but I don't need his newsletter, and I'm not saying that you do, but what I am suggesting is that it's a lot broader than most people would think until they get in the letter. I had a uranium situation that I really liked. It worked out fairly well during the uranium boom, and I don't like necessarily get in and out, but again, I let the market tell me. I called the top in the uranium market. In fact, Marin Katuska actually wrote for the Morgan Report for a few months, and Marin did a superb job. We put our heads together. I basically timed it, and he wrote it, and it was an excellent piece. And shortly thereafter, he started working with Doug Casey, which is fine. I think Marin's a fantastic guy.
Well, David, we've certainly once again covered a lot of ground. I look forward to our next conversation. Thanks so much for joining me today on the program.
Ellis, thanks for having me.
I've been speaking with David Morgan. His website again is themorganreport.com. Listen to the segment again on the podcast page of our website, ellismartinreport.com, and download the Ellis Martin Report on iTunes. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.